Market structure tutorial. All right. So, hey guys, I'm basically doing a market structure tutorial and I'm going over my personal market structure routine that I use for trading. And let me just get right into it. I forgot to connect my fucking headsets and I'm pissed off. Um, you know what? Yeah, just forget about it. Okay, so the first thing that I usually do, guys, when I'm doing a market structure, this is for if you're a day trader, a forex trader, a futures trader. It doesn't really matter what type of trader you are. This applies to all traders. So the first thing you guys want to do is you're gonna want to zoom out. Now, for me, when I do my trend, I don't do trend lines. I don't do shit like this, or I don't do shit like that. I'm more of a person that trades actual market structure, so the highs and lows that make the trend. So right now, you can tell obviously the trend right now looks like it's bearish, right? Because it's going downwards, right? So what now? Market structure is basically what is it about this that's making it go down? What are the highs and lows that make the trend bearish? All right. So when you're doing your market structure, you always start from left to right, current to the past, and you always want to zoom out too because when you zoom in, you can kind of see market structure, and you end up doing the wrong highs and lows. You end up marking up the wrong market structure. So what you really want to do is you want to zoom all the way out, and you want to go like this, and then what you're going to notice is the screen will be in the center and all price action will be right here in the middle of the screen. But the problem with that, guys, is that you're going to focus and get drawn to looking at all this. But the thing is, that's irrelevant because this isn't now, right? We're doing market structure, so we need to drag the screen all the way to the right, sorry, the left, and we need to focus on this because this is current. And so that's also why a lot of traders can't find their trade because they go like this and then they focus on writing up and marking up market structure that's all the way back over here. And then they get confused and they get what's called analysis paralysis. So what you want to do is do that, zoom out, and then move it to the left of the screen all the way. And then once you do that, you're going to go ahead and what I usually do is I like to take I don't use a trend line tool for my market structure. I use a highlight. So it looks like this. My current low, my current high, low, high, and yeah, so I have four pieces of market structure. So I have a high here, previous high, low, and previous low. And so the reason I have these specific structures because if you notice, this high right here created this was the high that created this low, and this was the low that was created by this previous high. From this high, the price came down all the way down to here, making this low. And the reason why we zoom out is because it shows us what's relevant. It shows us the relevant pieces of market structure. So it shows us basically that, okay, we can see that there is market structure in between all of here, up structure, down structure, but we're focusing on what's relevant because we need to see the bigger picture, the broader perspective. That's why I always zoom out because it allows you to see the actual full picture of market structure so you know how to do the trend properly. So yeah, so the 45-minute is a time frame I tend to do when I'm forex trading. This also works if you trade futures as well. 45-minute is a good time frame. And then once I have my market structure, then I look for my trading setups. So for me, I trade supply and demand, smart money concepts. I only trade about one to two types of setups. So I trade order blocks and I trade gaps. So when I'm usually doing that, I don't really trade anything other than that. So when I'm doing that, I usually find one to two examples of that when I'm back testing, and that's actually what trains my brain's ability to find these setups consistently in the market every single week. And so yeah, when you have less trading types of setups, it makes it easier for you to trade because your brain only learns two ways of trading, right? It only learns a certain type of amount of trading. Sorry, yeah, it only learns a specific limit of types of setups versus like trading like 10 different strategies. When you only focus on one strategy, that's what I'm basically trying to say is it makes it a lot easier for you to trade. So yeah, um, now that I'm bearish, what I would usually do now is I would go make sure on the 4 hour chart, I would make sure on the 4 hour chart that I'm not, I would make sure on the 4-hour chart that I'm not bullish, but I am bearish now, so I'm not really worried about that, guys. So I'm going to go ahead and continue zooming and looking on the 4-hour chart also for major gaps. So fair value gaps, supply zones, things like that. So there's one right here, but we had price kind of fill this one out, so I don't really feel like that counts. So I'm gonna just stick with the smaller time frame and see what's going on with there. All right, so okay, all right, so price came down 2 times. We had 2 legs. Price came down over here, dropped down low, then price came back up, then dropped down, came back up, dropped down, and now from this low here, what did price do? Price came back and went up, right? Came up, breaking these 2 highs, and then price went back down to retrace after that break of structure. And what did it do? Bounced off, went up a little bit, right? But I'm not but the thing is, I'm not actually expecting price to go bullish because I'm bearish. So what I'm actually waiting is for price to fall and break this. Okay? So, well, not break this. I need to find my point of interest yet. So I'm waiting for price to actually come either reverse from this area or reverse from this area, because these are all the supply zones that were created. So if price doesn't come to that top supply zone and reverses, I will continue and look for a fresh supply zone on a smaller time frame, such as the 5-minute, and then actually enter my actual trade. But for now, I'm not entering a trade until I see a break of structure, which would be here and here. And if that breaks, these two structures break, then I'm going to enter a sell. But if it keeps going up, then I'm going to expect it to reverse off of that higher time frame. But yeah, guys, that's pretty much what I do for my market structure. I used a 45-minute time frame. I used a 4-hour time frame as my daily chart, and that's pretty much what I do. It's not that difficult. If you guys are interested in taking a look at more of my videos, I have tons of them. But yeah, guys, 45-minute time frame, 4-hour chart. The 5 and 15-minute chart will tend to be what I usually use for most of my trading setups. And for some reason, those time frames, I just like those better. But yeah, guys, peace out.